Hello and welcome to the Rask Network. What you're about to hear and see is limited to general financial information only. Please be sure to speak to your financial planner or refer to our financial services guide available at rask.com.au/FSG before acting on the information.
G'day everyone, my name is Mitchell Snedden. I'm the Head of Funds Management at Rask Invest, and I'm today filling in for Owen, who's a bit under the weather. But luckily for me, I'm joined by Billy Leong from Global X. Billy, we're going to be talking tech today. We're going to be talking thematics. We're going to be talking a lot of big thematics that are not AI. So that's really exciting. So thanks for joining us, mate.
No, thanks for having me.
Excellent. So I listened to your last podcast, actually, with Owen, re-listened to it last night. I was walking home from book club, put it on, and you and Owen really talked a lot about AI. And so if people are interested in that, we'll put a link in the show notes so they can go back and get into it. But let's just go through a couple of little rapid icebreaker questions that Owen generally likes to do. So Billy, this is an unusual one. If you could have dinner with any tech investor or CEO, past or present, who would it be and where are you taking them?
Well, this is a good question because the first thing I thought about is where do I want to go for dinner first? But I think one thing I really like about or really respect about people is if they're more I think they understand risk. They're willing to take risk. I think generally investing is about not avoiding risk but understanding risk. And I do like people who are generally, I would say, no nonsense. And having said that, I'm not sure if this is a popular guy, but he's actually Reed Hastings. He's the co-founder of Netflix. He's very well known for turning around Netflix from a DVD focus into a streaming focus. And I think that's the part where I think I really appreciate him understanding that risk. A lot of people would have just avoided taking that risk, but he understood the risk and he took it. He's also, he doesn't overcomplicate things. There's something really famous about Reed is that he has a culture in the firm called team, not family. So he's promoting a team culture, but he's also telling everyone that we're not the family. We're just a team. We're trying to strive to make this firm better. And I think that's a really good approach and people have been very receptive of that. And having said that, I think one place I would think we would both appreciate is probably, I'm not sure this is a popular place, but it's a steak place in New York called Keen's Steakhouse. And again, they're a no-nonsense steakhouse. It's just good steak, nothing fancy, no gold on top. It's just a good steak. And I think we would both really appreciate that.
Well, if you guys were dining in Melbourne, then I would suggest going out to Richmond, a place called Vlado's. It's been around for a long, long time. It's like pictures of little celebrities on the wall of people who've eaten there. The menu hasn't changed in decades. I think you and Reed would like it. What's the most unconventional investment you've ever made?
Yeah, I'm still thinking about this right now. This would definitely be about 8 years ago. I actually invested into a cask of whiskey. And that was actually a time I started getting into whiskey. I liked it. I had appreciation for it. So the motivation initially was definitely personal. But at the same time, I did do some research at that time. It was a new distillery. It was called Ardnahoe. It's in Scotland in a really small island called Islay. It's been backed by really famous distillers and master distilleries. And the sort of second motivation for investing in that whiskey was because I was in Hong Kong at that time. And what I realized was that Hong Kong, it was very much a wine and beer culture, but that was actually changing about 8 years ago. People were going into spirits, gin and whiskey, and I thought this could be a trend. And so I combined these both personal and also this underground research, and I made that investment, and it actually turned out quite well.
That's interesting, because I know a lot of Australian investors who not on the market, but off market into a lot of these. There was a couple of schemes out of Tasmania. One infamously went under. And I know an old boss of mine actually owned barrels. And you could go in, and I've got a picture of him. Actually went there and went and looked at his barrels, and he's like, these are mine. And if he'd only just maybe given them a kick, he would have noticed that half of the barrels were empty.
Well, I haven't done that due diligence yet, so I have a picture of it. But what I know is that it's in terms of investment, it's been okay. It's been about 11% per annum for the past 8 years, so that was quite nice. But so the key learnings I think from that is don't underestimate that on the ground understanding. And I think the second thing is whenever you make an unconventional investment, always ask your partner or your wife. So I think those are two key learnings from that one.
You know what? I wasn't expecting that at all, but it's a good answer. Now, last icebreaker, what book, podcast, or resource has had the biggest influence on your investing journey?
Yes. It's a tough question. But I would say it's more of an experience rather than a book or resource. And I think it's probably about 6 years ago when I started working for a market maker. So it was more a trading firm. So we traded Hong Kong and China options at that time. So it was really at that time when I understood and learned about risk and what it was really about. And, prior to that, my investment philosophy was always about just doing fundamentals. And, when you've done that research, go long on it. But I think when you go into a market making or a trading situation, you actually know that it's not about avoiding risk. And like I said, it's about embracing risk and understanding what the potential outcomes are and how to go into it and, expect that a gain, or even if it's a loss, you understand it. So I think that was a really big experience for me. And having said that, I think that's a good sort of leadway to, one of the things I've heard people say about, what they appreciate in terms of trading. And this is a person called Michael Platt. So he's a famous investor and a trader as well. And he's famously said something about analysts. So he said he doesn't like the traditional analysts because they always think they're right. It's always about 12 months or 12 months target price. He likes traders. And the reason is because traders understand risk. When the market goes down, they understand they've got the wrong trade, they reassess and they go in again. Whereas the analyst would always go, it's going to be, I'm right, you're wrong. He said that he hired this guy. One of his favorite traders was a person that, wasn't great at poker. But what he did was he always go and play online on a Sunday morning when he was living in London. And the reason was that because he would be playing the US people who came back home drunk. So he knew he wasn't good at poker, but he was better than those people because they were drunk. And he would pick up about $5 to $6 grand each Monday, Sunday morning. And that's a really important part because investing is not about being the smartest person in the room. It's about being not the dumbest person in the room.
It's interesting that you keep coming back to risk because I remember listening to the podcast that you did, and Owen always finishes the first podcast he does with someone with the question of what would you go back and tell your younger self? I don't know if you remember your answer, but you said to take risk early.
Yes.
And you talked about it in the context of even just trading cards with your friends and things like that, and understand what that pain of loss feels like.
Yes. Yeah, definitely. Definitely no one should be avoiding risk. You should take life as in embracing risk, understanding the outcomes.
All right, let's get into our main theme of the day, which is thematic ETFs. Now, I actually want to start off by throwing something at you that I think a lot of dejectors of thematic ETFs would actually commonly say, that they don't beat the standard market indices like the S&P 500, for example. And some people view the S&P 500 or say the ASX 200 as a bit of a an evolving thematic ETF where the themes of the day are actually becoming larger and larger portions of that indices and driving the growth of the indices. So what is your, I guess, retort to when you hear that people say that?
I definitely, this is something that we get a lot as well as a passive ETF provider. This is somewhat, I would say it's a pushback, or is it just a discussion point? And I think it's valid. But I think the first thing off is that in terms of data-wise, and I'm a quant guy, is that the thematics do outperform the general broader indices. We've had a lot of back testing done. It does outperform. So we have evidence of this. So I think that's the first part. Number two is we have to understand or appreciate that a mainstream index like the ASX 200 or the S&P 500, it's very designed to be broad and simple. It's designed to replicate or to expose one to the wider economy or a specific part of the economy. So it's a very broad based index. And what that means is that there is no focus on the index. It's like you said, it may have a tilt towards a higher market cap, but at the same time, it doesn't have a specific focus. And it's not designed to, I guess, generate positive income. And if that's the goal of an investor, it doesn't do that. It's just generally to reflect that economy or that part of the economy. So unless you have a very big view on that economy or that segment, then go for it. But it's not designed to generate positive income. So having said that, I think a good example would be a lot of the times if you invested in a broader index, you would have missed out on the initial surge of a lot of key companies. So I think the famous one would be Tesla. Tesla wasn't even in the S&P until a very latter stage. And so if you were investing in the broader index, you would have missed out on the Tesla's initial run. And I think this has been underlooked. Actually, Amazon wasn't in the index or the broader index for a while as well because of their profit nature. And even Nvidia wasn't initially in the broader index as well. So I think the key takeaway is that there is a use for the broader index. It's meant to reflect that economy or the part of the economy, like the Nasdaq for tech. But you would miss out on a lot of growth opportunities because it's so broad and simple and does not include the high growth on the high potential ones that you would get, I guess, out of thematics.
When you say that the back testing shows that thematics do beat the broader market, are you talking about the actual back testing and everything until like a pre-launch of these ETFs and then ongoing? Because I think a lot of criticism comes that these ETFs launch when, the business of the issuer can raise money into it, and that's typically when the theme's hot. So from that point forward, there is generally a bit of a negative performance, and then it takes time for that theme to play out. So is that what you're saying? So after it's taken its time and it's over a very, very long term, you are seeing these themes outperform?
I think a bit of both. So when I look at even our Global X products, some are old, some are young, and even the young ones have been generally outperforming the broader industry, depending on which one you choose. But if you look at, I think even a longer term one, for example, our Global X Semiconductor ETF, that's a relatively, I guess, old or longer ETF. That's actually been outperforming on a consistent basis. And, again, I think that's probably a good time to actually speak about another advantage of a thematic ETF is because there's a very strong emphasis placed on the rules that are going into the construction of the thematics. And it's not just about, hey, you like semiconductor, we'll just buy semiconductor firms. It's actually about thinking, okay, who are the major beneficiaries of this semiconductor theme? And there's 3 or 4 subsegments. Who are the key players in these subsegments? Who are the ones that are going to potentially have higher market share, incremental growth? A lot of thought is put into that. And then finally, are they investable? So there's actually a lot of thought going into the actual thematic ETF. And I think that's where the strength comes in because yes, you could have a wide index that has these names as well, but you wouldn't have the level of confidence in the specific names, and B, you wouldn't have that weighting, which is very important in investing. How much do you size up or size down?
When you're looking across the market and you're looking at not just your Global X ETFs, but other, issuers ETFs, how closely are you looking at those rules? Because a lot of people, I think, maybe just stop at the broader theme, like the name, semiconductors. I want a bit of that. But how do you really go into that detail and look about how is this ETF compiled? Because sometimes I look at a thematic ETF and think, how is this company even relevant to it?
Correct. You're exactly correct. And one thing that we internally in Global X hold very strongly is that are our products true to label? Are we really representing A, the objective, and B, what investors are really aiming for? And I think this is really important. And going to a little bit deeper is that, for example, if we have a specific theme, we would want the companies to be exposed to it. So one of the key, criteria would be, do they have X amount of their revenue exposed to this? And this is going to your point, it's not just about having that specific theme on the company name. You have to have a specific amount of revenue, and that's very important. And that sort of gets away because sometimes the mainstream classification of the index or the classification of sectors, they don't really cover that. But if we look into it, we can actually look at the revenue, even on the return side, even on the fundamental side. And I think one thing that's important is, whether or not this is actually investable. I mean, there's a lot of companies which are actually doing this specific thematic, but they might be having, low market cap or low liquidity and not technically investable. And these are the things that we also consider as well. And so we do go through all this and try to make sure that the fund or the product is true to label.
What about concentration then? So let's, would you prefer to see a thematic ETF with less companies in it and more pure true to label companies, or are you happy with that broader diversified spread?
I think that's
it's probably ETF to ETF and thematic specific.
Correct. It is. So it's an interesting question because it depends what you're trying to capture in terms of that industry. So for example, I'll give you two examples. One is the AI theme, and I think we've talked about this in our previous podcast, where the AI theme is very broad and very deep, which means that we have to encompass several areas and a large amount of companies, and not just about subsectors, but also globally as well. So it's not just about US, it's also about Korea, Japan, Taiwan as well. So I think when we're looking at themes that require that broad scope, we need to maybe have a larger area. But when at times when we are very much focused on a specific theme, or the theme is only maybe 2 or 3 segments, we can get actually a bit tighter. So for example, our Global X Semiconductor ETF, it only has 30 stocks. And so, you would say that's a lot, but I would say that's much more concentrated than, for example, our GXAI ETF, which has about 85 stocks. So I think, again, like you said, depends on the theme. And it depends on how wide that thematic or that scope of thematic theme is.
Right. Before we get into the specific thematics, I'd like to talk about assessing how individuals can assess a theme, an ETF that has been in existence. I started my investment career at a value investing fund manager, and I've kind of been surrounded by that for quite a number of years. And so I can't help myself. I love to go and look at the beaten up, and so I love to go and look at the contrarian. I know I'm probably playing with fire, but I just can't help it. I want to go and have a look. Now, how would an individual out there be able to go and assess a thematic ETF that has launched at its peak, has come off, it could be trading 20, 30, 40. Some of them trade a lot, even lower to their listing price. How do you assess that? Is this thematic an actual enduring one that has got performance, potential versus a busted one?
So first of all, I totally like how you look at the stocks, because I met one of my previous clients from a long time ago. He likes 2 kinds of stocks. Ones that's gone absolutely up, or ones that's gone absolutely down. And I think, you're exactly trying to do that absolutely down one as well.
You just can't help yourself. If you've had any kind of value investing background, you can't help yourself but go, is there opportunity there?
I agree. And it works. But to answer your question, I think it's very important to understand how we assess, or how I assess a successful or a true thematic theme. And I know in the market or in the literature, there's a lot of talking about S-curves and all these different, but to me, there's only 3 things that you need to do to identify whether or not this is a successful thematic theme. And one is that, is there a strong technical advancement, a technology advancements in this area? Okay. And we can go into detail a bit later. Number 2, is there a environmental shift? Now, this is not just the environment, but also even a regulatory shift. So it's just the general environment. Is there a big major change? And lastly, is there a major demographic shift? And if you look at these 3 areas, and depending on the scale and intensity of it, if there is a convergence of these major changes, this is when we are very close, or at least we are very high conviction of that of a thematic trend or a structural trend. So I think a good example is to maybe let's talk about the PC. I mean, there's no doubt that the PC was a mega trend. There's no doubt about it. So if you look at what really preceded the PC trend and what the signals we've seen is, the first thing was during the 1980s, there was a major disruption in the chip technology. So there was a lot of chips at that time, but we actually went from the 8-bit to 16-bit chips. And that was the first time they were actually able to increase computing power by a large amount of ratio. So that was a really big move in terms of the tech advancements. Number 2 was during the 1980s, there was also a big act that was passed in the US called the Bell-Dulles Act. And so prior to this act, all the government-funded innovations always belonged to the government. So no one would just, invest or in these kind of innovations. It was after this act that allowed universities and small companies to take ownership of new innovations. And that's when more people started investing in these new ideas. And if not for this act, we would not have the World Wide Web. We will not have connectors as well, USB ports, none of that. So that was very important. And during the 1980s, there was a huge demographic shift. In the US, the working population had an average education of high school. So that's when people were more computer literate and more adaptive to computers. So it was the convergence of these three factors that allowed PC to actually become a structural trend. Anything that would have changed in these three would not have led to that PC being such a structural trend. And I always urge in clients and investors to, whenever they look at an ETF or look at a theme, are these three things happening? And I'm sure everyone could come to mind when they talk about AI. Chips are getting better. Governments are spending more money. That's the environmental shift. And there's a lot of adoption, demographic shift. We can always apply these three. And I think that's one key part to actually identifying a successful thematic trend.
Okay, well, let's use that then to go into the four themes that we've got today. We're not going to be going into AI because I feel like everyone's been bashed over the head.
That could be a homework for everyone to go back home and think about that.
So those three, let's use these four to unpack those three things for each of the four. So let's go into semiconductors. So let's the technology
advancement, environmental shift, and demographics. Yes, definitely. Semiconductor is probably one that I feel very strongly about. It's one of the best performing ETFs I've seen as well. And it's really interesting because it's actually not a new industry. It's actually been around for a long time. And it's, back in my days, it used to be reserved for very special analysts and, tech innovators that invest in it. But right now, it's actually a lot of people investing. And I think the reason is because, let's go back to the three key points. There has been a strong tech innovation. And I think one of them is called the lithography machine. So the lithography machines in the semiconductor value chain is used to actually make the chips. So essentially, lithography is the technique or the process of imprinting the markings on a chip. So the smaller, the more finer you can imprint on the chip, the more you can pack into the chip. So we've actually reached the level of what we call extreme ultraviolet lithography, which means people are saying that with a fine grain of sand, you can start etching marks on of sand as well. So we've reached that level, and which is why we are able to produce so strong GPUs and CPU now, because we're able to pack more into the chip. So that's the strong tech advancement. Number two is, in terms of environmental or even regulations in the semiconductor space, there is no doubt that we know there is so much supportive policies by all the national governments. US, we have the US CHIPS Act. Korea has a Korean semiconductor fund. China has a China semiconductor fund. The EU has protective measures for the semiconductor industry as well. So there is a strong environmental regulatory change that has, I guess, caused from national sovereignty that has supported this industry as well. And the demographic shift, and that's really interesting, is we now have much more applications for semiconductor. It's no longer just about PCs and smartphones. We need it for, obviously, AI data centers. We also need it for a lot of Internet of Things. A lot of the devices or form factors we're using now need chips. And even electric vehicles, EVs, are strong users of semiconductors right now. So this has all converged together, which has changed the semiconductor industry, which previously was a cyclical sector, and now it's more of a structural trend.
So, fair to say, positive outlook for the semiconductor thematic. What about valuation? How much does that come into play for yourself when you're assessing, is it a good investment now?
Yes. Yeah. I think that's another probably goes back to your prior question of all the pushbacks about thematics and ETFs, because one of the questions or discussion points I get is, hey, Billy, I like this. This is great. I believe in it.
This set of companies is expensive.
Exactly. And on face value, it does seem like it. When you look at a PE, for example, of our semiconductor ETF, the Global X Semiconductor ETF, it's trading at about 30 odd times PE. And they go, hey, the ASX and the S&P is trading at 20 times. Why should I invest at that? And this is a really important point, because it goes back to how the value investing, it's not about just the value. It's about what you get the bang for buck. So one thing I always talk to investors about, or talk to everyone about, is what are you getting for the growth? And this is when the classic PEG ratio comes in. So it's the price earnings over the growth of the company. And if you look at it from this angle, the growth of the semiconductor is looking at about 40 to 50% EPS growth for the next 2 years. So if you look at it from a PE, yes, 30 times, but if you compare that with the growth, it's actually much better than the ASX or the S&P because they're trading at 20 times. But the earnings growth is probably about 15% or 14%. So it's very important to look at a value, yes, from a PE, but also what you're getting from it. So I would always urge investors to look at it from a price earnings growth angle.
Right. This next one I put in here because I thought it'd be funny, but we were talking off air about this and you had a lot of interesting stuff to say. So let's talk about the metaverse. I thought the metaverse was done, dusted. It was so 2021. You know, now I just presume it was Zuckerberg on his own playing table tennis against himself. But let's run the three metrics across the metaverse. Tell us what you think.
Sure. So, yeah, I think this is a really good one. So I think on a top off, I think metaverse, it's not yet a structural theme yet. Okay. So having said that, let's work from it. So the tech advancements, are we there in terms of advancement? And I don't think so. And I think we've seen a lot of advancements in technology trying to appeal with this, like AR headsets, VR headsets. I don't think we're at the current technology yet because I think we've been discussing that last time I tried on a headset, I got a bit dizzy. So I think there's still some shortcomings in terms of that technology advancements. We need something there as well. Number two is the environmental and the regulatory change. I think we have that. You know, we've seen a lot of companies investing in it. Domestically, I think a lot of US and even China and even Asia, they're very focused. They're allowing metaverse. They're promoting this. This is a good social arena. So I think we have that little segment of factor there. But I think it's the demographic shift that's also unavailable or weaker the factor because there's still a limited adoption. I think people are not so, I guess, appealing with the metaverse yet. There's still not that many, I guess, monetization opportunities. And I think we discussed that, you know, if metaverse picks up, how are you going to monetize on this? And that still hasn't been able to establish yet. So I think within that three factors, we do have the environmental shift, but not the technology or the demographic change.
Tell me about, off air, we're talking about this specific theme. And you mentioned that this is one of those instances where it would maybe best, if you were interested in this theme, to hold a specific company rather than a bucket approach. Can you tell us about the company that we discussed?
Yeah, so we discussed about Roblox. Right. So Roblox
what is Roblox? I mean, I've briefly seen it. I've got a kid, but he's not up to that level yet. Tell us about Roblox.
So Roblox is, I wouldn't say a game developer, but a platform generator, a developer who's created a universe, much like a Minecraft universe, where users or players can, build their own world, but also experience in their own world. So it is a more social version of Minecraft. And it also increases the immersiveness and social interaction between users where they can go to each other's worlds or places and they can build things that can all both use. So they're trying to create this, metaverse. For Roblox, the share price has done well. They've created.
How do they make money? What's the revenue model?
So right now there is a subscription fee based on Roblox, and that's their main subscription fee. But to me, when we're dealing with innovation online and especially the social, when you're charging subscription fees, it's very hard to be sustainable. And I think we talked about this offline as well. Like for me, to make this a successful thematic or a successful even just an innovation, we need something much easier to monetize. And one thing that I always discussed was that metaverse is actually new real estate. It's actually new real estate. And imagine if you're inside a metaverse, inside a platform, and you're looking around and you actually see ads in that level. I think that's a very strong level of monetization area if we can actually reach to that level.
The advertisers aren't going to go though until there's actually people there.
Yes, so it's more of a chicken and egg story. And again, that goes back to, is there a strong technology advancement that can actually push a lot of people into this metaverse? I think Meta is trying very hard to create that hardware. And, we've seen a lot of headlines and stories about that, but we still need that angle, still need that push into more people into this platform.
So potentially a good example of the great, I think it was a Bill Gross saying, it's being early is the same as being wrong. Potentially.
True. There is definitely some truth there. Yes.
All right. Let's leave Mark Zuckerberg and the metaverse alone. Let's jump into slightly different, away from technology, to nuclear energy. It's really put in very much at the forefront of the political landscape. Let's dive into that thematic.
Yes. So I think even on that thematic, we can apply the same rule as well. But maybe I'll jump into the middle one, which is the strongest point within the nuclear or uranium thematic is the regulatory and the environmental change. I think what was really pivotal was 2 years ago in the Conference of Parties, the COP28, which is a conference where the world leaders meet up and discussed about environmental changes. And 2 years ago, what was major was generally every year goes by, they discuss about the same things, but nothing actually materializes or eventuates. But it was in COP28 when a large number of the participating members finally decided and agreed that they will restart and build out more nuclear power plants. So that was a pivotal moment because that's when they realized that they needed more energy. And the key was, if you looked at the usual suspects like France, they were building out more, but it was actually the new emerging countries such as India and China, which were earmarking or aiming to build or increase the nuclear capacity by about 7x in the next 10 years. And at the same time, the US, for the first time in 50 years, was restarting nuclear plants in domestically as well. And we've seen that news about Microsoft and Constellation starting the plant in 3 Mile Island, which is huge. So I think the regulatory shift and regulatory change is a big thing that we have to notice as well. On the technology side, there's actually a new advancement that has been overlooked, is what we call the small modular reactors, or SMRs. So one of the key shortcomings of nuclear energy was one, is it controllable? But it took a long while. Every nuclear reactor, did you know how long it takes to build?
It's like 10, 20 years.
10 to 15 years, exactly, 10 to 15 years. But
give or take.
It's very good. And a small modular reactor can be done in 3 to 5 years. So this is a faster lead time to actually create this. Number two, it can be much more flexible in terms of where it's placed because it's actually underground. It also makes it much safer in the event of an issue. So because of this technology, we've solved the previous shortcomings of the old nuclear power plant. And the third factor, going back to the third factor, the demographic change, is that now we know that we need these energies. So for example, in the US right now, the data centers is driving about 8%, about 3% of total energy usage in the US. And this is going to triple in about 8 years' time. And this is because this is purely driven by data centers. So we do need more energy, and we also need more clean energy. Because if you look at the current, traditional coal-fired energy, their emission is about, 800 grams per kilowatt hours. But if you look at nuclear, it's about 15. So there is very strong demographic need and change that, appreciation for cleaner and more sustainable energy. And I think this is something that all comes together at the same time, driving this thematic.
And from a political standpoint as well, I think there's definitely a growing education and understanding of it. Now, just tell me, when it comes to actually building a thematic ETF around this, I notice you guys have a uranium ETF, but is there an ETF that actually looks at the other players in the space, like rather than the actual commodity itself, like the picks and shovels, so to speak, of the of this thing?
Excellent question. So that exactly goes back to our thought process of how to build
about constructing
ETF.
It, yeah,
constructing ETF and how to make it true.
Because you can be right, but if you get the wrong rules in there, get the wrong companies in there, then it's a dud thematic. It's a dud product.
Yeah, and it's just not true to label. And we are strong believers of this. And like I said, we would go through that exact 3-point factor to go into. So for example, using our Global X uranium ETF, which is called Atom, by the way. So we actually have the 3 parts. So in terms of technology advancements and also the demographic shift, we have so-called the picks and shovels, the companies that are actually building the plants, transferring the plants, providing the power for the plants, and also not power, but also providing the infrastructure support for the plants. And we also have the uranium miners as well. So it's actually a combination of all the miners and the infrastructure plays and the supporting companies as well. So it's all that, I guess the scope of that theme, and we truly believe in it. It's not just about the commodity.
Well, speaking about the commodity as well, I think something that a lot of people who are looking at this space have seen that the uranium has had such a significant run as the popularity and talk of adoption of this grows. So that once again is a valuation wise. Do you still think that that's got a long way to run?
Yes, I think, like I said, if you look at it from a longer term perspective and valuation wise, there is some value in it. It's a little harder to actually value this because if you look at this sector, it's not purely based on, for example, price earnings, price sales. There's a lot of value put in terms of the actual assets of these companies. So I think we have to look at it from different points of view. So I think just looking from, the assets or that view, there is some value there. But I think the key is also it's important to understand that 3 factors driving this thematic. And if we look at that, we do see that growth coming from all these areas. And, I will admit, we would see a time maybe when uranium miners don't perform so well. But at the same time, we would see the infrastructure plays performing well. And I think that's the whole point of a thematic ETF because we have that wide scope, which also provides that diversification benefits.
Excellent. Now, let's go on to our last theme here of cybersecurity. I don't think, and no one's in doubt that cybersecurity is incredibly important. You just have to go visit any social media platform and you're getting direct message by bots or scammers and things like that. It's definitely growing and will continue to grow. So let's go through the three key criteria. And then let's discuss some of the ETFs available to get access to cybersecurity and perhaps the makeup of those.
Yeah, sure. So, and I liked how you started this because you talked about how it's people are more aware of this. People know about this, and this is exactly that demographic shift. There is an increasing amount of awareness. There's multiple reports about how CEOs and CFOs in the C-suite are putting more emphasis into cybersecurity. We are actually seeing.
Well, it's a PR nightmare. If you we've seen Optus.
Exactly.
And all these other people that have been hacked, and that is front page news.
Exactly. And we're actually seeing more and more attacks or threats, in the last few years. And in fact, if you look at the largest 3 cybersecurity threats or incidents, the largest 3 has happened in the last 2 years by monetary value. So we're seeing not just more frequency, but also larger amounts of damage being done. And the interesting is, despite all this, the amount that's spent on cybersecurity is still, not moving as much. So, for example, the data point I'll share with you is that over the past, 15 years, as a percentage of total IT spending, cybersecurity has been only going up from about 6% to 7%. And so this is what I would call the 1,000th paper cut. We've reached to a point where now it finally hurts, and we've realized that. And, if you want some evidence of finally people realizing that, is to look at more the government sector. So in terms of the US Department of Defense, they've increased their amount spent on cybersecurity substantially in the last few years. And this always happens whenever the government does it, we'll see the private companies doing it as well. So to me, this is one of the key signals that we're seeing that potentially private companies or public companies to benefit from a rise in spending in cybersecurity. So if you look at the last few quarters, we're seeing cybersecurity companies providing much more ongoing and incremental new revenue. So one of the key, benchmarks for cybersecurity company is their average recurring revenue. And that's actually been increasing substantially in the last few quarters. So I would say that we're in this sort of start of this potential awareness. Government are spending more money, which is the environmental changes. And the technology shift, I would say, is the implementation or the expansion of artificial intelligence into cybersecurity.
Right. Okay. So, coming back to AI, so how can you tell us about it? How do you think that AI will impact cybersecurity?
So it has impacted both ways. So because of AI, the threat towards cybersecurity has actually increased as well. So we've seen it in the last few years, the use of AI to infiltrate companies have increased as well. But at the same time, we'll also be using artificial intelligence as a defense measure as well. But I think in terms of what I'm seeing, the defense measure applying AI has been slower adoption than the attack and threat. And I think this is where we would see in the next 5 to 10 years, where the increasing adoption of artificial intelligence in the defense of cybersecurity, or literally cybersecurity, will come in. But I would say that right now it's mainly used to actually attack, or the threat is from artificial intelligence.
So, Billy, if we take a step back and you can, from what we've discussed, or maybe there's another theme that we haven't discussed, if you're going to throw one more in there into the mix, I'm putting you on the spot now, what would it be?
So I think one theme that
that can't be AI.
Well, it's related to AI, but one thing I do like, which and honestly speaking, we don't have a product on, and so it's the digitalization, or the the innovation into healthcare. Again, I think that's something a lot of people are underestimating in terms of going forward. And, we see a lot of rich people or prominent people investing into healthcare, and everyone thinks it's all about them trying to increase their longevity or their health. But if you look at what's really happening globally right now, because of technology advancements, we've had increased productivity. Over the last 10 years, the amount of hours that on average people are working have actually decreased. So which means we're now giving more time in terms of our personal health and also our fitness as well. Number 2 is that people are living longer. So we've already seen that the first baby that's going to be 100 years old is already born. So people are living longer, people have more time, and finally, there's actually more diseases in terms of communicable diseases right now. So these 3 factors combine, what we're going to see in the next 10, 20, even 50 years is that there's going to be much more emphasis into personal health. And because of innovation, artificial intelligence, this is an area where we could really improve on and begin monetizing on as well. And so, if you ask me, what am I doing my research on? If there is an opportunity to put my money on, this is something I would really, urge everyone to actually look at.
So are there companies out there right now that you can take advantage of? Like, when I think of digital health, I think of maybe businesses like Teladoc in the US, things like that. Is that what you're referring to?
Yeah. So I think right now these are still a very premature industry or theme. I was probably more referring to the adoption of new technology such as AI into drug discovery, into more solutions in terms of healthcare, which haven't really materialized yet. We've seen some companies adopting this. Which is evident because if you look at the past 10 years, the number of FDA approvals have actually increased. And one factor is because we're using AI in terms of drug discovery as well. But I think it's a little premature, but it'll be something where I'm looking at right now.
Okay. Now, if you then had to combine that with one of the 4 we've spoken about, and you have to hold it for the next 10 years, you can't sell it, which one?
I think one I would really like right now would probably be the atom, or this uranium.
So the nuclear energy one.
Yeah, I think we're still very early in the stages of this thematic. Like I said, we have global governments supporting this. We have the technology there, and we also have increasing, the adoption or acceptance of the wider population. So I think this is one where I feel like you can close your eyes and sleep on it for the next 10 years.
And let's talk about the portfolio weighting as well. How much are you carving off? So say a lot of people might be doing a core and satellite approach. I think that's actually something that doesn't get spoken about a lot when it comes to thematic investing. It takes part of the satellite component. It's not, and that's the thing about investing. It's not an all or nothing game. You can slice your portfolio up. So of that satellite component, what kind of weightings is reasonable or sensible?
Yeah, I really like that. I think it goes back to also my trading days as well, assessing risk and how to size up. And I don't want to give you exact percentages on where I want to go, but I think one thing that's easy for investors to look at is the amount of, portfolio position you'll put in depends on, 2 things in terms of the thematics. One is the TAM, which is the target addressable market, which is essentially how big the market could be. And number 2 is the potential growth. So for example, I'll give you an example. So if you look at the artificial intelligence, it's estimated to grow to about 16, trillion in terms of economic impact in about 2030. It's going to grow at about 8% compound annual growth. So, we have these two numbers. For example, if you look at the semiconductor industry, it's much smaller. It's going to go to about 1.3 trillion by the time, but it's going to grow at a much faster rate of about 11%. So you're combining these two. So I would say that if you see this, you will put more weight in terms of the larger addressable market and maybe smaller weight for the small addressable market. So it's both the function of the size of the market and the growth. And if you look at a specific company, it would also depend on their market share. So if you look at a company where it's in a huge market, huge growth, and they also have a large market share, then you will put more weight on this company than a company that in the same industry, but with less market share. So I would look at it from these two functions and adjust the weight accordingly.
That's great. Excellent, Billy. Well, mate, thank you for coming in here and visiting us on your trip in Melbourne. We really appreciate it. And if anyone wants to find out a bit more about your thematic ETFs, I know Global X has got a great ETF landscape report, so we'll put a link to that in the show notes as well.
Sure, thank you. And obviously, they could visit our website, and also our team members are happy to help them.
Awesome, thanks, Billy.
Thank you.
Thanks for watching this video on the Rask Network. While you're here, don't forget to like and subscribe so you can get videos each and every day on business, finance, investing, and so much more.